Welcome to PEI Office Hours, episode 13. Today, we're going to talk about private equity firms investing in AI, which I think will be an interesting topic with some data. And as a bonus, I've included some lessons learned from implementing our own AI initiatives here at PEI. So my hope is that the first part will keep you informed on relevant AI transactions that are happening in the PE space. And the second part will help you with your own AI strategy and implementations, as I'm sure you're working on those now, as we are, like everybody else. Also joining me today is Kevin Ferroni, Senior Vice President of Sales and Strategy here at PEI and TrueSight. Unfortunately, we had video problems with Kevin, so he's audio only right now, but you can see him at the top of your screen probably. Kevin looks like a name with a green outline. So. And moderating is Maddie Gardner in our marketing department. If you have any questions, please throw them in the chat. If Maddie sees things that are pertinent to the slide we're on, she's just going to interrupt me and we'll just use that as our Q&A. Kevin, thanks for joining me for Office Hours.
Pleasure to be here, and I appreciate everyone else who's joined us as well.
Cool. Let's jump in. Kevin, I'm going to ask, my voice is almost gone. I'm going to ask that you just feel free to interrupt me anytime because I might just get on a roll and, I may just keep going. So, jump in with your input as you see fit. Let's jump into the presentation. What I want to do is share my screen. And Kevin, if you don't mind, if you can just confirm that screen share is working.
All good.
Okay, cool. AI investing comes of age is the title of the presentation today. Private equity shifts from platform creation to platform expansion. So what we did, like using data from the PEI database, we looked at private equity investments in AI companies from 2015 through 2026 year to date as of April, May sometime. There were, next slide, 1,243 transactions recorded, of which 929 were platforms, 314 were add-ons. Now, this is platforms and add-ons, PE-backed in the AI space. This graph shows the yearly PE investment trends in AI companies for both platforms and add-ons, same kind of color scheme where the teal would be the platforms and the orange color would be the add-ons. You can see that from both the platforms and add-ons, both of them continue kind of up and to the right. Let's note that 2021 is a bit of an anomaly year for all industries, as there was a spike in deals across the board, not just in AI. And the debt was artificially cheap. The Fed was printing money, the story. So there was a lot of COVID stimulus happening here. But here's something that's really notable to me. If we step back, Kevin's on video.
There we go. Yeah.
You figured it out. Brilliant. If we step back and think about when did the broad AI adoption happen by we'll say the general population, it didn't really happen until the very end of 2022. I can remember Christmas that year talking about AI, family. What a nerd thing to do. And with the launch of ChatGPT landing on the chat interface for AI, that was really the kind of the start of broader adoption. But prior to that, really the AI implementation was buried in specific products think of Siri, Alexa, Google Translate, Amazon product recommendations, and that sort of thing. But it really wasn't positioned for the individual to use directly, at least not as easily and intuitively as the chat interface when it came along. So of note then is how early some of the PE firms were investing in AI companies here. Some of them even before 2015, not many, but if the rest of it started coming on board in late 2022, prior to that, all those spikes, that's a little foresight, we'll say. So with that said, I think we can break this chart down into three somewhat distinct phases, which I'll talk about next. The 2015 to 2020 phase is what I'll call the early experimentation. I mean, this in that time, it really looked like venture capital. It was frontier technology. Things were evolving in the business models. I mean, it's more clear now than it was then, but I'm sure it was opaque. And like I wrote here, the valuations were built on faith, like they are sometimes in VC world. But in then phase two, the 21 through 23, really started getting some platform building. And by this, I mean, I'm talking about the private equity industry investing in this space. And so this is I guess the private equity firms begin to sort of more broadly show an appetite for an investment in AI companies and recognize at this time, I think in this period here, that AI was the next big wave. And I mean like tidal wave, internet, mobile, AI, that kind of size of a wave. And then phase three is 24 through 26. This is really platform expansion, the rise in add-on investments. And this is where we begin to see more AI for blank industry, or what we might call like industry vertical AI solutions. But what we also saw in this 24 to 26 period was real tangible efficiency gains in productivity from AI adoption, and hence real cash flow to those AI companies and exceptional growth. And that's all good metrics for PE investing in their acquisition criteria.
And Andy, just to complement some of what you were saying there, and over like the first several slides, I think looking at the data, it was pretty shocking exactly that everything went back to 2015, because I know certainly over the last several years it's been topical and webinars or conferences to touch on the AI boom. But seeing to the earlier commentary around the platform side of what's been taking place, it's really twofold: is looking at AI companies that are, creating new agents and new products, but then also the underlying industries that private equity firms are effectively underwriting against, where AI is in the strategy within the four walls of a portco. So seeing that next stage of evolution on what's been platform versus what now is translating a bit more, and I know it's on the upcoming slides here, on the industries that are most impacted or ripe for disruption or operational alpha by implementing AI into the portcos that they hold.
Yeah, that's a good segue. So the next question is, what industries are these AI investments going into in private equity? Healthcare, software, finance, marketing, cybersecurity. Really no surprise there, I think, for everybody. These are the most obvious use cases for AI implementations. The number two here, I skipped it because core AI platforms, these are really the core infrastructure layer for AI that goes into all the industries. And so I guess it's an industry now, a new industry created, like that is an industry, but it's just not a traditional industry, and it gets applied to all the other industries, but we list it here. I suppose this doesn't surprise you to see these industries, does it, Kevin?
No, not particularly. I do think that every one of them has their own nuance as it relates to like the application. So, removing the second bullet point there with core AI platforms, healthcare, whether the market overall is doing well or not so well, healthcare is going to be relatively consistent. So, seeing that across the board, whether that's something as it relates to AI for imaging or analysis, it's a very, very, obviously as the stack ranked list here would indicate, like high priority. But then even like working down to some of the things on like the right hand side, cybersecurity, I think we've all seen or read enough headlines about what's taking place on how phishing, maybe it's a little bit old school at this point, but how different cybersecurity practices are implemented, whether it's a smaller firm or obviously some of the larger enterprises, because there's always going to be, people trying to take advantage of, how they can get into the four walls of a business, and cybersecurity for publicly traded companies, particularly, is always going to be top of mind. But even like with customer service, retail, and then how are individuals interacting with the website if they're scrolling through an ad? What is their sort of buying behavior on seeing something on LinkedIn or elsewhere, and then they're purchasing or clicking on that and purchasing, and how do they visit a website and scroll through? It's just like a very, very vast ecosystem.
Thought I'd take a quick look in the next slide to the top three: healthcare, core AI, and software, and ask, why are these the sectors that are getting AI adoption quicker than the others? Well, within healthcare, you have a regulatory clarity, I would say, that has a known, defined, documented processes with lots of data, right? Great use case for AI. You can bound the process within steps. Number two, we've already covered. Number three, software. Nerds are early tech adopters.
Mm.
I can say that I'm a former engineer, so I call myself a nerd too. And they built AI for themselves, obviously. And but the productivity gains in coding were quite amazing and still are. And you pair that with recurring revenue models of the software companies, and it just ticks all the boxes for private equity investments.
Hmm. Yeah, just to
Yep.
complement that too as well, it's like the industries themselves, and then how could somebody within those industries implement AI? But then from the PE lens as well, it's like what does an integration look like from once you have the platform and you're looking for add-ons or bolt-ons for that platform investment? Like what does an integration path look like? That's where AI also sits on the ops side.
Yep. Yes, exactly. All right, time for bonus slides. So that's the bit. Maddie, if there were any questions in the chat, shout out. Otherwise, I'm going to move on.
No questions yet. You're good.
Okay, cool. Bonus AI implementation. These are, we've learned a lot in our AI implementations here at PEI. These are three that I just picked off, and I think they're probably obvious when I say them, but I think they're worth saying. Number one, AI projects are never done. And that's because AI is probabilistic coding, not deterministic. So historically, when you had code like we used to do it, you had inputs that go into your code and you have outputs that come out of your code. If you put in the same inputs, you're going to get the same outputs. And that's what you would expect, but that's not true with AI because it's probabilistic. And you can get a different set of outputs for the same inputs each time you put something into AI. So consequently, it seems like there's a never ending opportunity, we'll say, to fine tune your AI output better and better indefinitely. So, second point there, point B to point number one is as AI models progress and they step up in versioning and get better and better, older models retire. And the faster the new models are developed, which is going really fast right now with AI, the quicker the older models retire. And the problem with that is when you take a model you built your process on and it retires, there's a non-trivial and somewhat unknown amount of work to get the next upgraded model to function properly within the process that you've previously built. And then you're back to fine tuning and on that hamster wheel again. So just be aware, I just wanted to say this, that AI projects aren't like deterministic code that still runs from the 1980s and 1990s. The models expire and have a certain, we'll call it, non-zero maintenance cost into perpetuity. So just know that there's a certain future amount of technical debt that you'll inherit with AI implementations. And that's true with all code and implementations, but it's particularly true with AI because the pace of development means the retiring models are retiring quicker than you might expect as well. So that's point number one. Kevin, jump in anytime if you feel like saying something.
Yeah, I think the trends that we're seeing overall, and just like what we've observed in the market, maybe it's a little bit obvious, but it's the fact that like we've cleared sort of that initial experimentation phase with AI, and while it might not be certainly not a mature market, it is maturing. And that obviously is going to be impactful on how private equity in particular is deploying capital, and then how they're looking at sourcing those targets, because it's not just looking at the big platform investment. It's really how are you looking and staying on top of those underlying industries if you are in healthcare or down towards the bottom of the list, retail and consumer. Who are the sort of target businesses and companies that you can track that are indicating increasing trends? As far as like roll-ups ultimately for, ideally, knock on wood, a profitable exit. But I think it's impacted the shift on how, the investors themselves are looking at what's out there and tracking what's out there in the market, and any signals that relate to keeping sort of an open eye to, trends that they're observing, ideally to be in front of it before being retroactive.
Thanks. Point number two, data plus AI does not necessarily give you intelligence. If you skip the data structure steps, you'll likely have subpar results from your beloved AI project. The proper path is warehouse the data, co-locate it, structure the data, and then use AI to infer meaning, i.e. intelligence, from that structured data. Structuring data probably is considered boring, but it's a critical step to a successful AI deployment. And it's one of the best parts about sitting on PEI's database of 21, 22 years of structured data. So that lends itself to a great AI path. Point number three, if you think about where you can get the biggest bang for your buck, start with vertical solutions. And by that, I mean things that are very specific, high volume business processes, as opposed to horizontal deployments, which are general purpose tools for all employees. Those are more difficult to roll out and deploy, and they will have a significantly lower efficacy. And so the key takeaway here is the kind of the bottom box. If you think about where you can get the best bang for your buck, is ask this question. I think this is the right question to ask. Which process in your business is high volume, high cost, low creative variance with ample structured data? And that's where you're going to have the most success with AI. Mm-hmm. So those are some things we learned. Hopefully that's useful to you. If you want to pick my brain, give me a call separately. Kevin, you want to close this out, talk about any comments you have and signals, and we'll wrap it up.
Yeah, sure. And I think as you sort of put a bow on that nicely, it's the operational alpha side of it, where there's always within the PE side, our landscape, right? There's always ways on you buy the target, you retool the target, and then sell it for a profit. And the firms that you no longer are just like levering with debt, and how you're putting more best practices into place, especially on the AI side, is where a lot of firms I think are finding that alpha. To the comment on signals, that's certainly what part of PEI, that is a part of our day-to-day life, on how we're helping and supporting our own clients look through and comb through what is a very disjointed market by lower and mid market, but certainly as well there's no shortage of AI firms out there where it might be AI itself as a opportunity is not a flash in the pan, but there is that idea of like, well, there's so many of them, which one is going to survive or going to swallow up the others? So I think having that constant ticker of what is happening specific to the implementation of AI and the businesses that are doing well, but then certainly the underlying and corresponding industries that seem most disruptive in a good way and positive way to both the GPs and the underlying assets. And that's what we're built for at PEI.
Cool. Thank you. We try to keep it short and sweet. That's all we've got for this office hours. We'll have another one in a month. I don't know what we'll be talking about, but it'll be something cool, I hope. Thank you, everybody, for joining. I hope you have a fantastic weekend.